What's the future of Bitcoin after the recent halving event? That's the question on everyone's mind. Let's delve into it. Bitcoin halving, a key event in the cryptocurrency world, is when the reward for mining new blocks is halved, effectively reducing the rate at which new Bitcoin is created. Historically, these halving events have had significant impacts on Bitcoin's price. Take a look at CoinDesk's comprehensive analysis and other reputable sources. They suggest that after each halving, there has been a substantial drop in Bitcoin's price. But why is that? Well, experts believe this drop is due to the decreased incentive for miners, which could potentially lead to less network security and ultimately less demand for Bitcoin. However, it's important to remember that the cryptocurrency market is highly volatile and influenced by a myriad of factors beyond just halving events. Opinions from industry experts provide an invaluable perspective on this complex issue. With the halving event, history suggests a potential drop in the price of Bitcoin, but can we rely solely on history? As we continue to navigate the unpredictable world of cryptocurrency, that's a question we must keep asking ourselves. A prediction of a $50,000 Bitcoin price has been making the rounds, but how probable is this? There are several factors to consider when trying to gauge the likelihood of this prediction. First, let's look at market trends. Bitcoin's value has historically surged following a halving event, with prices peaking a year or so later. This pattern could suggest a potential spike towards that $50,000 mark. Investor sentiment is another key factor. The crypto community is typically bullish post-halving, and this optimism could drive up demand and, consequently, the price. In terms of the broader economic landscape, there are several variables at play. The inflation rate, interest rates, and geopolitical events can all influence the price of Bitcoin. But what do the experts say? According to an analysis by JP Morgan, as featured on CoinDesk, there's a likelihood of a price drop after the halving. However, it's essential to remember that these analyses are based on historical patterns and current market conditions, both of which are subject to change. Predictions are never set in stone, but they provide a sense of direction. Will this $50,000 prediction hold true? What could this mean for Bitcoin users and the broader market? If Bitcoin reaches $50,000, it could potentially change the landscape of the crypto market. For investors, this could mean a significant return on their investments, especially for those who held on to their Bitcoins through the ups and downs. For miners, a higher Bitcoin price could also mean higher potential earnings, offsetting the costs associated with mining. However, it's important to remember that mining also becomes more difficult after a halving event, requiring more resources and potentially impacting profitability. The broader crypto market could also feel the effects. A high Bitcoin price often creates a halo effect, drawing more attention to the crypto space and potentially boosting the value of other cryptocurrencies. Experts suggest various scenarios. Some predict a bullish trend, arguing that the price increase could trigger a new wave of adoption. Others caution that a steep rise could lead to volatility and possibly a correction. As the dust settles post-halving, only time will tell if the $50,000 prediction will become a reality. Stay tuned to this channel for more updates and analysis on the exciting world of cryptocurrencies.